This is out new. Assalamu alaikum. Welcome to the next episode of Bitcoin 101. We are having a lot of fun here today. We have beautiful, interesting episode talking about ethics. We have our little classroom here set up here. You ready? Everybody's ready. We are looking at a study that is looking at illegal activities in this ecosystem. So we will look at what's happening and try to determine how should ethical Muslim investor understand this situation. So we are looking at the 2019 journal article, quite interesting article written by one of professors from Australia University in Sydney. And its title, Sex, Drugs, Bitcoin, How Much Illegal Activity is Financed Through the Cryptocurrencies, and the link to the study is available in the details down below. So they tracked use of Bitcoin between 2009 2017, and they analyzed the entire ecosystem around it. So what they found out is that in the entire Bitcoin system, there is 26% of users and 46% of all of these transactions associated with illegal activities. That means that we need to consider how is this transforming the black markets by enabling illegal e-commerce. And when people talk about Bitcoin being, for example, store of value, we are going to see that it is mostly referring to unethical value. Okay, let's get into this study. So as a starting point, they are creating a sample. Authors explain that sample was based on several recent seizures of Bitcoin by law enforcement agencies like FBI, and combined with the public nature of the blockchain, this created unique laboratory in which to analyze the illegal ecosystem that has evolved into the Bitcoin network. Although individual identities are masked by pseudo-anonymity of 26 to 35 character alphanumeric addresses, the public nature of the blockchain allowed them to link Bitcoin transactions to individual users or market participants, and then further identify the users that had Bitcoin seized by authorities. Bitcoin seizures combined with a few other sources provided them with a sample of users known to be involved in illegal activity. From this sample, we are trying to estimate population. First approach is basically it exploits the trade networks of users known to be involved in these illegal activities. Bitcoin blockchain is then used to reconstruct complete network of these transactions. After this part is done, we are applying, or the researchers apply, the network cluster analysis to identify two distinct communities. One is those legal users and illegal users. Okay. Now, the second approach was to use characteristics between those two groups of users of Bitcoin to build this model. What people are doing, how are they behaving, what does that tell us regarding their activities, and then they're pairing it up with known data from the sample. A result of this analysis and forensic investigation show us quite interesting data, which is that a quarter or 26% of all users and around half or 46% of all transactions are associated with illegal activities. Fifth, or 23% to be exact, of total dollar value of transactions, and about half, or 49% of Bitcoin holdings throughout time are associated with illegal activity using this algorithm, using this method. In April 2017, it is estimated that 27 million Bitcoin market participants that used Bitcoin primarily used it for illegal purpose. Now, what are some of the characteristics that we know about these participants? Is that they transact more than other users, they use small transactions, they hold less coins, more likely to repeat that transaction with the counterparty. They use Bitcoin as payment system to facilitate this trade, while the legal user is treating Bitcoin as investment or speculative asset class. What does that tell us? That a legal user uses it as you use money to transact, to buy and sell as a medium of exchange, while legal users are basically holding it. They, hope that somebody else will buy it at more price, at higher price, and so on. But what is interesting here is that, and this is me just saying it out loud, that was not picked up necessarily too much in this study, but who is using it here for a legal day-to-day commerce between these legal and illegal? So while people sometimes discuss percentages, is this percent correct? Is it half? Is it third? What is the ratio of legal, illegal activities, transactions, values, and so on? Issue is that who is using it legally for day-to-day transaction here? Okay? No one, basically. One of these predictors of illegal activity is that users more likely to be involved in illegal activity if they use stumbling or wash trades, two trading techniques that help conceal one's activity. And you will see that real utility of Bitcoin is hiding you from the public, what you are doing. And you pay premium for that. Why is that beneficial for illegal users? Because they want anonymity on the darknet. So if you look at Bitcoin versus cash, a lot of people will say, well, you know that cash is king of facilitating crime. There is most of the historically and traditionally all crimes and illegal activity are done with your good old cash. So there are some other reports that tell us, no, it's not half of the transaction, it's 1% of the transaction and so on. Now, a lot of these studies, you look at their results, they show fraction, very little bit is happening on Bitcoin that is illegal. If you look at their methodology, for instance, they are looking at known marketplaces or participants. So they are just looking at what we know. They are not trying often to estimate what's really happening. And they are not necessarily independent. They are usually activists who try to legitimize cryptocurrency market. They might say something like, in US alone, in 2010, there is 10 billion US dollars used for illegal drugs. So they'll say that's, you see this is what's happening. And cash is anonymous as well, facilitating. But what is the reality of Bitcoin versus USD? Is that dollar is widely used in our economy. What is the scale and population of users of both of these currency, and see which one is more or less harmful? We'll see that here on the Bitcoin side, as we said, almost half of the transactions are done in terms of illegal activities, and maybe more, as I will tell you a little bit later on. When you compare that as an argument against your, let's say, dollar, which I'm not arguing it's most ethical, and I talked about it. There is a lot of problems, a lot of issues. I mentioned it in my first and second episode. But here, you look at the transactions here in terms of both transactions and the volume, we are talking about hundreds of billions of transactions. And that's in US, and hundreds of trillions in terms of the volume. So those hundreds of billions are really 0.something% of what is going on here, whether you look at the transactions or volume. And here, due to very speculative size of the market and the small volume of these transactions, illegal, they tend to obscure the fact that most of these, especially in terms of the mining fees and everything, because remember, when the miners do their job, they get the fee regardless of the size of the transaction. So half of what's support and backs the network is from these illegal transactions, or a large majority, regardless of these numbers. And so it's between these speculative transactions and illegal transactions that network really derives its value. while here the number is very small. And if we want to really here inject the rest of the speculative transaction, well, just the speculation in terms of foreign exchange is 5 to 6 trillion a day. So we see that, yes, fraction of this is involved overall in the legal. Issue here is that we use this for legal commerce. Majority or most of it is used for day-to-day legal commerce and running economy and supplying us and exchanging goods that we all need, buying this, buying camera, paying for bills and so on. Okay, so let's look at this a little bit further. Cryptocurrencies like PayPal and credit card, they have enabled digital transaction, e-commerce. That's now talking general. Digital payments, in essence, revolutionized retail and wholesale trade. And this is particularly true for the online world. These digital payments had major impact on consumer patterns, choices that we are making, competition, supply, and demand. Look just what Amazon has done, or eBay, or these marketplaces, Alibaba, connecting hundreds of millions of customers with millions of suppliers, revolutionizing the country and e-commerce and so many different things. Until cryptocurrencies came, impacts were largely, of these digital payments, were largely limited to legal goods and services. So your credit cards, your PayPal, mainly when you transact online, that was impacting legal side of things. Why is that? Because of traceability of digital payments, which with the digital crypto, this traceability disappears. That opens door to potential structural shift in how black markets and illegal markets operate. Okay, you remove traceability from digital payments with the introduction of crypto and bitcoins. You open the new world of illegal commerce. Okay, so what we are looking now is shift towards illegal markets, illegal e-commerce. And these illegal markets, we can see the trend. They have adopted crypto at scale, and it's impacting the growth of these illegal markets. Major use of Bitcoin and cryptocurrency as a payment system is in setting where anonymity is valued. So what's the benefit of crypto when it comes to these markets is that you are hidden from public in terms of what you are buying and selling online. And that's why when you think about it, why users are not so worried then about exactly finality of the payment, fees of those transactions, slow system. This cost of that decentralized is it gives you anonymity, hides you for public, for which value? You remember, whenever we talk with activists from Bitcoin community, they always say it's a store of value, it's a great utility, yeah, it's not cash, it's not this. You can't pin it what it is. It's this. It hides you into the dark corners of the internet to do something. So we see the growth of new illegal online economy. It's more accessible, convenient, less risky for the users. So significant component, we could say, of value as a payment system is derived from its use in facilitating illegal trade. And so ethical implications of this are that people who are using Bitcoin for investment, what they are partnering in when they invest or when they do mining or things like that, valuation of those investments derive from what? Who is using it for what? Who is transacting it mainly as a currency? These users. So that's where value come from. And then encouraging aggregate black market. So this brings us to evolution of illegal marketplaces. This allows sellers to reach global audience that they couldn't reach with traceable legal systems. It's international and it's developing more and more complex method to avoid detection. So anonymous digital methods of payments, Bitcoin. Bitcoin did for darknet marketplace what PayPal did for eBay. And what's that? provided reliable, scalable, and convenient payment mechanism. For instance, in 2017, Alphabet had over 350,000 of items for sale in categories such as drugs, weapons, malware, and legal pornography. And this is not including all of the scams, frauds, money laundering, and other things. Often that is included in what we are terming as illegal transactions because we can't see that. But I'll get back to that a little bit. So let me show you this graph, what is happening. And again, understand that we have a problem with the dollar, and we discussed that. I don't want to go. This is not, let's go, dollar is better, or this one. I'm talking which one is more harmful. We know the issues with this system that we have currently, with the central banks, regulators, what they are doing, crisis, and so on. And we discussed the problem exactly there, mostly regulatory problems, which this one completely does not have, and open the door to even more abuse. So we are saying we are going from bad to worse, much, much worse, less and less regulated. Something that is revolutionizing the way we spend money online for illegal things. Because if you look at the normal currency, you can use it directly as a cash or online, digitally. As a direct cash, you can use it legally or illegally. No one can stop anyone. No one can stop this or this. In the Bitcoin also, the direct and digital. So everybody can use cash between two parties as they wish. No one can stop that. We're not going to stop living because this is happening. And we saw that that is a fraction of what is going on. This is reflection of people. But online commerce is limited because we have all of the regulations and transparency and traceability, so that mostly here it's legal. Yes, there is some illegal, but that is limited. They have to play a lot of tricks, so it's hard. Some money laundering is happening. Offshores, Panama paper, read what they're doing, which will be even more relevant for this side. But for the most part, it's a legal commerce. Now, what is Bitcoin doing is they are enabling that particular side that was unusable before. Okay? So while this is necessary for functioning economy and is limiting this as much as possible legally, here we have the same structure plus this magnified. Okay? Legal part is largely speculative legal part. Illegal is day-to-day commerce for illegal things. And we are scaling illegal online commerce. So what people are using Bitcoin as, let's repeat, half of it is illegal, half of it roughly illegal. Legal side is mainly speculations. But question of money laundering. If you understand how much money laundering, trillions, is happening here and through all of these offshore havens and schemes that people develop, don't you think if we just replicate quantity here and here, this providing that anonymity and techniques where they wash coins, send them through another different bunch of coin exchange, and then they circle them, recycle them around, connected with anonymity, how big of a problem here is money laundering, especially knowing that most of those mining pools come from jurisdictions where this is very useful. China, Russia, some of these biggest mining pool registered in Cayman Islands. Okay? So my guess is, study doesn't say, my guess is much of what you also consider legal, large quantity is connected with money laundering and other things. Okay? So, people who say it's a store of value, well, this store of value is backed by mostly unethical transactions, from which it takes intrinsic value and utility. And so, yes, it's a store of value, but store of mostly unethical value. Should we encourage the system as user, miners, and investors that is primarily focused on day-to-day commerce in hidden corners of the internet? Or should we be more encouraging, regulated, transparent system where the possibility of harm is reduced. So far, I told you about limitation of Bitcoin as a currency, as a technology, incentives, economics of money, finality of the payment, energy that is wasted. Although people are trying to say, well, it's not that much energy, using mostly green, people always throw some fake statistics. They don't realize that in these areas, Russia, China, you think they are going after the green or cheapest energy. Often with the officials, they make a backdoor deals to run free electricity. You understand? And so all of these things and finality of payment, possibility of unraveling those payments in a complex economic system that we have, with the way that we are using it for unethical, it's building us to what we are going to discuss in the next episode. Is this a product that can become future of our money, our currency? Is this what, if you go to clubhouses, those Bitcoin enthusiasts will say, this will become store of value and reserve currency that will be used like a gold? Imagine that. And is this what drives people to invest? And I know some Visa, MasterCard, PayPal, Tesla, of course they're going to use it because everybody from these conventionals, anybody who wants to benefit from wave going up, especially these payment networks, if they can take a cut. I told you, bankers, what's the banking about? I was just explaining my son in the car today, what is the banking? And it's simple, if you understand this. If you take a pot, okay, and you have party A, party B. So money is going from one party to another, okay, in a pot. All right? This is money. And so if you look at the economy, money is circulating between different participants into this pot. All right? So what is the banking business? Banking is facilitating intermediation between two parties, participants in the market. So as the money going back and forth, okay, back and forth, all right? What the banker is doing, banker put some honey here, okay, and they put their hand inside. So when money moves, some of it sticks. That's a banking business. That's intermediation. Some of that money that sticks from number of transactions is where the spread is and they profit, okay? In the finance world, any kind of volatility, any kind of more movement, what it means for the bank, more will stick as the money flows, okay? So with Bitcoin, volatility and movement and prices and all of these speculative, of course, any payment network and structure will try to get their hands inside because they don't have a risk. You have a risk. They can just take a cuts. So don't be fooled by somebody's getting into this to benefit. Big hedge funds, big banking, big names, concentration, prices going up. Think yourself, what are you getting involved? It is not an indication that something is ethical just because the price is going. Okay? So join me next week when we are going to talk. Is what we are building something that should almost, if we understand, I'm not saying people have this intention, but if we do understand, should we understand that this business is beginning to look much more like a pyramid scheme? And I'll tell you how in the next episode. Share this if you think somebody might benefit. Leave me the comment what your thoughts are, and I'll see you next time. Assalamu alaikum.